Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, and we are now at September 16th, 2021, 6:30 p.m. Wow. Now, I did a special report. I'm going to start off letting you know that. Remember, I promised I'd bring back special reports. And I get a lot of people that want me to cover more in the grain. So I decided, hey, I don't cover that much for that. Why not go ahead and do it? So I did a soybean report for those of you that like to look at the soybean market. It gives you what I think will be the key time frame for the market to make a low off the harvest. And remember, we've been under pressure here and where I think the market might make its run too. So it gives you a whole idea. I'll carry you through the daily, the monthly, the weekly charts, and then the seasonal. So it's quite interesting. It's about 8 minutes long, but at the end, it tells you how you can view it. Okay, so we have triple witching hours tomorrow. Whoa, it means that the options go off, the futures in September go off, and it could be a fireworks day. You always have to be careful. And today was pretty wild. You were down hard this morning. Then if you took a walk, and I often take a walk during the mornings. I get out, and I like to walk a certain amount of steps, and I do so. It's beautiful in Chicago right now, and then I come back and go, looks like a different market. And that's what you go through sometimes. But let's go to them and get a feel for what's going on. For the week, I know you wouldn't believe this because it's been such a rough week, but we're actually higher by 0.29%. Whoa. When we take a look at the chart action, you have fallen down and you're going into whipsaws over the past 5 days. You had this one break. Now, if you watch up, down, sideways, every which way, going nowhere. You're getting churned. And understand that that's very typical in front of these triple witching factors that happen. The trend is clearly down, lower highs, lower lows. The market on rallies is having pretty serious issues getting over the 18-day average of closes. The bias is down because prices are under the 18-day average. You'd have to get over this high in order to say, hey, the market's no longer in a downtrend. Barring that, the trend is down. And now let's take a look to see where the Bollinger Band is. Right through here. You've been knocking on the door of it the past couple of days, finding the support, going back up towards the 18-day average, running into the resistance, and momentum is just gone flat on you, but not turned up. Bearish bias, bearish trend, support 44.31, resistance 44.85 right now. In the NASDAQ, after the nice run up, the market has gone to sleep at the 18-day average of closes, the red line. What's the trend? There is none. You have a lower low, higher high, and you're stuck at that average and drifting in momentum. In the Dow, you're still in a downtrend, but there's serious support in this market at the 100-day average and the Bollinger Band. Prove it doesn't hold. If you want to bust through that, you got to prove it. Right now, it's been unable to do that. We've been in a downtrend since up here. We've consistently been making the lower highs, lower lows. You have to break through this high right here of 34,907 to break this pattern. And if you do that, you still have to understand the 18-day average is staring you in the face. Let's assume right now the market doesn't break through yesterday's low and does that. Gets through this 34,907, gets over 34,955 on the close. You'd still have a lower low, higher high pattern. So it's going to be very difficult to get bullish here, but I can see support in an oversold market. In the Russell, you've dropped off sharply from that rally, and you can see the resistance. Now, this is not an ideal bearish setup. Why? Because the 100-day average, the green, is underneath the 18. If it were flipped around the other way, it could be more bearish. If you drop down, there's substantial support between 2189.5. The Bollinger, that is, by the way, the 200-day average and the Bollinger Band at 2193. So that's where I'm seeing the support, the resistances here. You've had the consecutive patterns of lower highs, lower lows. You need to take out this high from 3 days ago in trading, actually 4 now, in order to break that pattern. But I don't see anything to turn the chart bullish, and that becomes the problem. This will fill in 1 second. There we go. So We made a run, but didn't quite get up to the upper Bollinger Band in the VIX, and we've pulled back today, got to the combination of support. Yesterday, what were we talking about? Let me bring this in so I can do this for you right there. I said that if you fall further, the combination I'd be looking at is the 100-day average to the 18 to be supportive. It's exactly what occurred, and I'm looking now for the resistance to be up at the 200-day average up to the upper Bollinger Band. So this whole combination right there. Market's not been difficult to track. In the 30-year notes, they held the 18-day average. Where you did miserable was in the other part of the curve yield. The 10-year fell apart, so now you got a higher high, lower low, down to the lower Bollinger Band where I think the market's going to temporarily try to hold. And in the 5-year, you did the same type of action. When you look at the dollar index, you still have the lower low, higher high, overbought. Even if you rally here, I contend the pros, they'll be bailing on the longs at the 93.12 area. Bailing on longs is not the same as going short. I hope you appreciate that. They're very different. In the eurocurrency, trend down. I'm looking for the pros to bail on shorts at 117.53 in this market. Resistance back up at the 118.31 level. Trend down, bias down, but oversold. So be careful right there. British pound, you had one shot to come out of this market against the upper Bollinger Band, and lo and behold, the 100-day average of closes. And I was adamant. That's where I thought the pros were coming out. Boom, you have fallen rather sharply from there. And in Bitcoin, I see nothing. I see a market that's got the lower low rather, the higher high, 3 days in a row sort of stuck at the 18-day average of closes. Somebody wrote and said, I've dropped Ether. The only reason I'm not covering Ether is I want them to bring on their mini contract. Once they do that, I'm going to be all over Ether. So I intend on bringing it, but I think it's too rich, too big of a contract size the way it is. Once they bring it in like they did in Bitcoin, you're going to get the public in there just the way they ran to the Bitcoin new contract. And that's what I think at least. In WTI crude, notice how you've slipped back under and staying under this 18-day average, which means the differential where you had the Brent running up and you weren't carrying the WTI has sort of switched gears. I believe that's Hurricane Ida and this terrible storm. People don't realize how rough this tropical storm Nicholas is and what havoc it is creating with rain. It is moving at 2 miles an hour and just flooding areas that it hits. I don't know if you saw tonight in Washington, D.C., how much rain they got. I think that's still remnants, of Ida. You know, Nicholas is yet to show. I think, not a weatherman. When I look at November Brent, this is a big resistance area. I said it the other day. I think the pros came out up there. I know the trend is up, and I know that you've got the embedded reading and they're buying, and I do believe they're buying on breaks, pumping against the upper Bollinger Band. WTI, same thing. Until you lose that embedded reading, the play is you come in, you're looking to buy the breaks. You'll say, where's that break? Go to our website, under education, look at the enhanced Bollinger Band course. That will help you. Take a look right here. You've got heating oil just staying strong. And I said, I thought that could be this way. You don't have enough energy products going into the cooler weather when it does arrive. Nat gas, well, now tonight you're flirting. The word is flirting with losing the embedded reading. I can't say it's lost it until the end of the day. A reading under 79 would be, no, you want to be careful. I was telling traders in my this morning in my subscriber video that before this happened, as we were up here, I was saying, got to be sure you take some money off the table. I have the videos to prove that. And I said, you let the market prove if it gets a correction that can hang in on that embedded reading. As I said, I know that I don't cover grains the way that you want me to here. So I decided to give a lot of you the grain gift. I did a special report on soybeans. I did it because there's a key date at the beginning, last week of September, beginning of October, where if you study the 15, the 30, the 5-year patterns, the market normally makes a low and takes off to the upside from that point. Do I know that'll be the case? No. I know what history has shown. I know that we've been overall in a bull market, and I've covered you for both bull years, bear years, and nothing years, and all three seem to fit in that scenario. Want to see it? I cover it with the seasonals, the weekly, the monthly, and the daily charts. Go to our website under the word research. You will see our video research ad. It's labeled very clearly. Enjoy the video. I'm Ira Epstein. You have a great day.